morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, July 17th. Yesterday, we had a whole lot of nothing, basically an inside day from yesterday, and you really had to dig deep to try to look for some stocks. A lot of traders that do trade certain sectors and stocks that they're familiarized with. Obviously, a good note to do. Really didn't do much yesterday. Very, very quiet. And that's to be expected based on that big move we had on Friday. And here's that 10-minute chart I like showing, leading off of the morning call videos for. Big move up, and now we just consolidated. One thing I did want to point out was yesterday we had discouraging retail sales data come out real bad. And I think that's setting the stage for Ben Bernanke today. And a lot of market participants are basically speculating over the likelihood of Ben Bernanke starting a hint about QE3. Now, he doesn't want to do that, obviously, but he doesn't want to rock the boat to Wall Street due to the fact that it is an election year. So that's something interesting, and I saw the dollar sell off on that. That's a good news. That's definitely good news for the bulls, but we really need to see. This is just speculation right now and not just hearsay. In after hours, though, when I was looking at the markets late last night, futures are up about 6.5, so that's really good. And they were talking about that basically was China stating that the China market has bottomed. Some of their speakers were stating yesterday, so that kind of rallied Australia going into the Asia session and put a pretty decent sized bid in equities in the E-mini overnight futures. So we'll need to see what happens. One thing for certain is that China really likes to stretch the truth, so to speak, and that's known already for many years. So the big risk event today is going to be Ben Bernanke at 2 o'clock. We do have some numbers early this morning. 9 o'clock, 9:15, we have trade flows. 9:15, we have industrial production. And, of course, we have some NASB housing market index. So that's something that'll be obviously in a morning call. You can take a look at that yourself. So I want to lead right into the charts, and it's funny how the last 2 weeks we've really been within this 5-point range. Really did not much of anything. I mean, if you came in long, then you'd made some money on Friday, or if you came in short the previous week, that one dip down, you made some money, and that's really a 50-50 shot. And that's something that we're not looking to do. We want to take the odds that are in our favor. We want to really trade really easy setups and trades that really make things that look easy into the fact that's basically obvious. We don't want to be just trading just to trade. We want to make money, and we want to get in and get out of the markets, and that's really what we get paid to do. So you see here yesterday, really an inside day. If you were fighting it, you could realize why, and it's a good chart to put up and kind of bring it in and see what we have here. Low volume. So really nothing to talk about. And you can see it on the indicators. It's going to be a short video, guys. Really can't sugarcoat too much. So anyway, if you see our bar chart momentum index, love to see this indicator. We're sitting smack dab in the middle. We were getting a little bit overboard. I would have loved to see this pop yesterday and then get a little bit of a pullback and a sell-off, which would be expected, and short that market. But right now, not telling us much of anything. And that's something that the NYMO will back up, and you can see that right here. Right, we came down a little bit, flat. Now we're down 10 to be up 10. Really not telling us much. So we need to be patient. One thing I do like the fact that we did consolidate yesterday, and the futures are hinting that we're up 6. We could get a little bit of a breakout. Now, I will say one thing. As much as there's a lot of cracks here, that does not mean that we don't want to buy the market, right? We want to go with what the trend is telling us. We want to be with the trend. We don't want to go against the grain unless it's some sort of a climactic setup, up or down. But as of right now, we want to stick with what the trend is telling us. And it would not surprise me that this market could rally another 60, 70, 80 S&P futures, S&P cash, in the next week or so. 2 or 3 weeks, rather. I'm not saying it is, but it wouldn't surprise me. So we really want to be on our toes. And right now, it's tough to be short and tough to be long right in this area here. So today would be would kind of produce a buy signal, actually, if we do take out Friday's high. If not today, tomorrow. And then that would put really new order flow into the market again. So let's talk about some of the I want to show you the put call. We were hooking up, and now we're making, we actually rally lower. So total complacency in the markets, as you can see, lower high, lower high, lower high, lower high, lower high. So total complacency in the market. So investors and traders are really not worried as of right now. However, that could change rather quickly, as we all know. Now let's take a look at some of the, let's take another look at the dollar. And this is something the market bulls would like to see. This dollar double topping up here now. big move here. Couldn't get through this area. Now starting to sell off again. Now, this is another thing we need to keep an eye on. And as I know, I've been telling everybody, please watch what the dollar does. Very, very critical. Dollar strength is going to put market weakness in S&P, all stocks and commodities. So really use caution here, okay? But as of right now, this is a good sign pulling back. They could pull back and bull flag, something similar to this, right? Come down to here and then really take off. Now, I did show you a chart last week that the 88 area is a high. We could actually absolutely get up to that high. So let's just really use caution here, okay? As of right now, by the dollar pulling back, that's a good sign. It's something that we want to see. Now, here's always I want to show you some of these little cracks in the market. Now, here's the S&P weighted index versus the S&P large cap, right? Lower highs, lower highs, lower highs, lower highs, lower highs, and the S&P is actually moving higher. So not good. We don't want to see that, right? We want to see this go up in tandem. And as you can see here, we're right in the middle of the range in our stochastics, and as you can see, we're not even really oversold yet. So something that I really would like to see this turn up, but this is something that I really would not like to see. I'd like to see these things start moving up. Here's our 30-year bond. Again, actually, he's been noted for many, many, many decades that obviously the bond guys, the bond traders are smarter than the equity guys. They know before what we do. And this is just an example of what I showed you last week on the 30-year Treasury Bond Index. This is the USB, okay? Still continuing to rally, okay, on a daily basis. This is, again, not healthy. People don't care about yield. They care about safety. So if money's going into bonds, it's got to be coming out of somewhere. So it's not going into the equity markets. Now, that could change as well, right? We are overbought, right? We're extremely overbought here, all right? We're not really overbought much in the RSI, but again, we're up at those lofty levels. So sure, the bond market could actually sell off, and we could really rally hard here. So again, something to keep an eye on. There are some cracks. That doesn't mean that we can't trade, and we don't want to trade because there's cracks in on the wall, but we just really need to be cautious here, okay? Let's get right into the index charts, and here's our daily spiders. As you can see, inside day here. Today's going to be key. We take out that 135.90, you're going to see how quickly this market's going to rally, and it would basically take out the last 1, 2, 3, 4, 5, so at least a good week of trading. And that takes that high out. You're going to get right up in this area here. And this is going to, let me extend that out. You easily get to that 138, 139 area. So something to keep an eye on, guys. These are the spiders now. But I usually like looking at the spiders intraday. Shows me volume. And it's a good barometer of really gauging where the market's going intraday as well. Okay, our inverted head and shoulders. I always say, look, I think, 138, give a dollar or so. It's pretty close. But again, still valid. And was just consolidating here from yesterday's big sell-off, and we're right at the upper end of the ranges, right? So if we're consolidating at its highs, it's easy to break out, and today could really be the test. So something to look at. Qs, as you know, Apple heavily weighted, came under some pressure last few days. Did have a decent little bounce yesterday. Kind of held the Qs right in there. As you know, semis were decimated, so I'm looking to see what semis does. And Intel's going to be a big barometer. I mentioned that yesterday, holds true today. Keep an eye on what happens with Intel. Now, earnings have been coming in pretty good, right? The analysts lowered the bar, so they've been beating earnings, but some of them have been really taken to the woodshed. All right, especially some of these semis, as you know, AMD. They guided lower and they got crushed after hours. Now they're not an Intel, so Intel's going to be a big bellwether, and it would not surprise me if Intel comes out with good earnings that they rally, that this market rallies based on those news. And I'll tell you nothing, it's going to be a decent trade we're going to be keeping an eye on is those semis. They've been beaten down for 6-7 days. If Intel comes out with any good sign and they guide higher, I would definitely be looking for some of the semiconductor sector. Pick a nice stock that really hasn't changed, just as selling off in sympathy. Pick the strongest stock and look to buy that for a nice trade. Okay, IWMs. Now, again, very encouraging, like I mentioned, from Friday, Thursday, Friday. Now we have here, we're just sitting right in this area here. Again, above the 20, 50, 200. I want to see us take out this 80-15, and then we can get new order flow and move higher. So consolidation is good. There's nothing wrong with consolidation, guys. Nothing wrong with it at all. So today's going to be really a big day today. We're going to really see what happens in the market. Transports, leaders in the sectors that we follow, right? Hooking back up in those, right in that neutral area, 50-ish. And then look at the MACD starting to hook back up again. Really good sign here. A break above here, guys, we're going to be really ripping to the upside. And now that again could change. Anything coming out of Europe changes anything. Right now, people are neglecting to see what's happening in China. We have a major slowdown in China, and some of the China leaders last night saying, "Oh yeah, the China markets has bottomed." I don't believe it. I think there's a lot more downside in China. But again, we trade what we see. We're not. I'm not a news reporter. Nobody's a news reporter. We're traders. We trade what we see. So until that happens, until they focus on China, it's yet to just kind of follow it and set aside and get ready for your trade when that does happen. Okay, last one, diamonds. As you can see here, basically another insight. A lot of these charts are the same. We did get above the 20 and the 50 finally back in the diamonds, okay? But look at the volume. Volume very, very weak on the way down, on the way up, excuse me. And that's really that's not good. I don't like to see that. But if you can see, our stochastics rolled way down below here. So we'll see what happens. Usually Dow Jones is really a follower. They follow all of the other indexes, so everything else will pull the Dow Jones with it if we do get a rally. All right, keep an eye on that testimony with Ben Bernanke today at 2 o'clock. Very important. And Intel's numbers. Make sure you really watch what Intel does and see what the traders really react to their numbers. Good or bad, how does the market trade? Have a great day, everybody. We'll see you tomorrow. Take care.